Imagine a financial revolution so massive that it is projected to capture between $16 trillion and $30 trillion of global wealth by the year 2030. To put that into perspective, that is roughly 10% of the entire global GDP. We are not talking about volatile meme coins or digital pictures of bored apes. We are talking about the complete rewiring of the traditional global financial system. Over the last few years, the market for this technology has skyrocketed from a mere 85 million in 2020 to over 36 billion by late 2025. This explosive growth signals that we are standing at the edge of a new era. The experimental phase is officially over, and the era of active global digital markets has begun. Welcome to the world of real-world asset tokenization, commonly known as RWA. This technology is quietly running in the background right now, preparing to transform how you buy, sell, and own almost anything of value on the planet. To understand why the biggest financial players in the world are obsessed with this, we first need to understand what it actually means. Real-world asset tokenization is the process of taking something that has real, tangible value in the physical world and creating a digital twin of it on a blockchain. Think of a blockchain as a highly secure, public, and unchangeable digital notebook. You can tokenize almost anything. We are talking about commercial office buildings, rare fine art, gold bars, company invoices, and even government bonds. Instead of dealing with piles of paperwork, lawyers, and slow banks just to prove that you own a piece of property, your ownership is represented by a digital token. This token lives in your digital wallet. But the most magical part of this process is a concept called fractional ownership. You do not need to buy an entire $10 million apartment building in New York. Tokenization allows that building to be digitally sliced into millions of tiny pieces. You can easily buy a token representing just $50 worth of that building, making high-level investing available to ordinary people for the very first time. For decades, the financial world has been slow, expensive, and exclusive. Tokenization changes all the rules. First, it creates incredible liquidity. Normally, if you want to sell a piece of real estate, it takes months of searching for a buyer, negotiating, and signing endless paperwork. With tokenized assets, you can sell your fraction of a building on a digital exchange in seconds directly to another person. Second, these digital markets never sleep. Traditional stock markets close on weekends and holidays, but blockchain markets are open 24 hours a day, 7 days a week, 365 days a year. Third, tokenization cuts out the middlemen. Thanks to something called smart contracts, which are basically automated computer programs, things like dividend payouts happen instantly. If you own tokens in a rental property, the smart contract automatically calculates your share of the rent and deposits it directly into your digital wallet every single month without a broker taking a massive cut. Finally, the transparency is unmatched. Because the blockchain is a public ledger, anyone can verify exactly who owns what and where the money is flowing, making fraud incredibly difficult. If you think this sounds like science fiction, you should know that the titans of Wall Street are already here, and they are spending billions. BlackRock, the largest asset manager on Earth, launched a tokenized fund called BUIDL, which quickly gathered billions of dollars in assets. Their CEO, Larry Fink, publicly stated that the tokenization of securities is the next generation of global markets. JPMorgan Chase is also heavily involved. Their blockchain unit has processed over $1.5 trillion in transactions, allowing massive institutional clients to move money instantly, safely, and without the usual delays. Other traditional giants, like Franklin Templeton, Fidelity, and Goldman Sachs, are launching their own tokenized funds and platforms. These companies are not interested in speculative crypto hype. They realize that blockchain technology is simply a massive upgrade to their outdated plumbing. By adopting tokenization, these institutions save money, reduce human error, and offer their clients faster and more reliable services. So, how do we connect a physical gold bar or a brick-and-mortar building to a digital token on the internet? It requires a bridge between the physical world and the digital world. Step 1 is identifying the asset and securely storing it. If it is gold, it goes into a highly secure, regulated vault. Step 2 is the legal framework. A specialized legal company is created simply to hold the rights to that asset. Step 3 involves writing the smart contracts and minting the digital tokens on a blockchain network, like Ethereum or Solana. But there is one more crucial piece of technology needed: oracles. Blockchains are isolated systems. They do not automatically know the current price of gold or the latest interest rates. Oracles, like the Chainlink network, act as secure data bridges. They constantly feed real-world data into the blockchain, ensuring that the smart contracts have the exact tamper-proof information they need to function perfectly. It is a beautiful symphony of physical security, corporate law, and cutting-edge computer science. Of course, no revolution happens without a few bumps in the road, and RWA tokenization has some serious challenges to overcome. The biggest risk is not actually the technology, it's the real world. If the physical vault holding the gold gets robbed or the legal company holding the property goes bankrupt, your digital token could become completely worthless. A token is only as good as the physical asset and the legal paperwork backing it. Then there's the issue of cybersecurity. While blockchains themselves are incredibly secure, the smart contracts written by humans can sometimes contain bugs. If a hacker finds a loophole in the code, they can drain the funds. Another massive headache is market fragmentation. Right now, there are dozens of different blockchains. An asset tokenized on one network cannot easily be moved or sold on another. It's like having different cell phone networks that refuse to let each other call. Developers are working hard on interoperability protocols to connect these isolated islands, but it remains a major hurdle. Finally, there's the law. Because tokenization merges finance and technology, governments are struggling to figure out how to regulate it. Some countries are moving aggressively to become the global hubs of the future. Singapore is currently a massive leader. Their government actively partners with global banks to launch tokenized assets safely through initiatives like Project Guardian. The United Arab Emirates, specifically Dubai, has created very clear and innovation-friendly rulebooks, making it a hotspot for real estate tokenization. In Europe, the European Union has passed a comprehensive set of laws called MiCA, providing a unified and secure framework for 27 countries. Switzerland has even updated its federal laws to recognize blockchain tokens as legally binding securities. Meanwhile, the United States is a paradox. It's home to the most wealth and the biggest institutional tokenization projects, yet its regulatory environment remains confusing and strict. U.S. regulators generally treat these new digital tokens exactly like traditional stocks and bonds, wrapping them in decades-old red tape. However, as new laws and frameworks slowly emerge, the entire globe is racing to capture this multi-trillion-dollar market. We have reached a pivotal moment in financial history. The year 2026 is widely recognized as the turning point where tokenization transitions from experimental pilot programs into an active, globally accessible market. Looking ahead to 2030, the vision is breathtaking. The financial system will no longer be hidden behind the closed doors of elite banks and lengthy settlement delays. Instead, it will look a lot like the internet does today: instant, global, and seamlessly connected. You will be able to easily diversify your savings, placing a portion in tokenized U.S. Treasury bills, a fraction in a commercial high-rise in London, and a sliver of a private credit fund. Your portfolio will update in real time, generate automated passive income, and be available to trade 24 hours a day directly from your smartphone. Tokenization is doing to the financial industry what email did to the postal service. It is stripping away the friction, lowering the costs, and finally democratizing wealth creation for ordinary people all over the world. The $16 trillion era has officially begun.